Everyone thinks Venezuela's oil is a switch. Flip it on, money flows, power returns, a nation is saved. That story is comforting. And it is wrong, because oil is not magic. It is memory. It remembers neglect. It remembers bad decisions. And it charges interest. Today, Venezuela is not an oil giant. It is a country sitting on damaged machinery, heavy crude, broken fields, a system starved of capital and trust. Politics can change overnight. Oil cannot, even with sanctions lifted, even with foreign companies ready, even with Washington watching closely. Production moves at the speed of steel, geology, and money. If you want to understand why oil riches rarely arrive on schedule, why promises collapse under reality, this is a story you need to hear. Follow this analysis if you care about how power, resources, and time really work. Now, let's step back. To understand why Venezuela is here, we have to understand how it got here. To understand Venezuela's oil dilemma, we have to strip away the headlines and focus on structure. This is not a story about reserves. It is a story about capacity. Venezuela holds vast oil underground. But underground oil is not production. Production is wells that work, pipelines that hold pressure, refineries that can process heavy, sour crude, contracts that investors trust. Right now, Venezuela produces about 800,000 barrels a day, roughly 1% of global output. That is not collapse, but it is far from strength. 20 years ago, production was near 3 million barrels a day. As recently as 2016, it was 2.5 million. The gap between then and now is not geology. It is management, sanctions, and decay. Some fields can be repaired with modest investment. Others require massive capital and long timelines. And much of the oil will always trade at a discount. This is the core tension. Big political expectations, slow economic reality. To see why recovery is so difficult, we need to look backward at the system that shaped this decline. To understand the present, we have to revisit the cycle that broke Venezuela's oil system. Oil once defined the Venezuelan state, not just as revenue, as identity. For decades, production was stable. Foreign firms operated. The state collected rents, and PDVSA became a symbol of sovereignty and competence. Then the cycle turned. Contracts were rewritten. Control was centralized. Politics replaced engineering. Investments slowed. Maintenance slipped. By 2007, major US oil firms had left or were forced out. Legal battles replaced partnerships. Capital dried up. At the same time, oil prices masked the damage. High prices hid falling productivity. Deferred maintenance became normal. Skilled workers left. Sanctions later accelerated what was already failing. Exports fell. Cash vanished. Infrastructure aged without repair. Oil fields are not factories you can restart. They degrade quietly, relentlessly. By the time politics changed, the system was already hollow. And that sets the stage for the first shock, the moment expectations collided with physical reality. The first shock comes with a simple realization. Opening the gates is not the same as restoring the flow. When sanctions ease, production does not surge. It hesitates. Yes, Venezuela can return to around 1 million barrels a day fairly quickly. That sounds dramatic. Until you see the limits, adding the next 500,000 barrels is harder. Pipes need repair. Compressors need replacement. Fields need crews, chemicals, and power. Even optimistic estimates require $10 to $20 billion. And at least 2 years, this is where the illusion breaks. Political victories are instant. Oil recoveries are not. Every additional barrel demands imported equipment. Imported light crude to dilute heavy oil. Imported expertise Cash goes out before it comes in. If you're thinking this sounds like a fragile bet, you're right. Oil can revive Venezuela, but only slowly, and only if confidence holds. That's why control alone is not enough. Ownership alone is not enough. If you want to understand why oil wealth so often disappoints, and why systems matter more than slogans, keep listening. Because the real story is not visible on the surface. It's buried in the mechanisms underneath. Beneath the headlines, a quieter system is doing the real work. And setting the real limits. Venezuelan oil is heavy, thick, sour. It does not flow easily. It does not refine cheaply. To move it, you need diluents. Lighter crude, often imported. To sell it, you accept a discount. Always. That means higher production does not equal higher profits. Not quickly, not cleanly. Then there is structure. PDVSA is not just a company. It is a symbol. Erase it completely and you risk future backlash. Preserve it fully and efficiency collapses. So the system searches for balance, joint ventures, minority stakes, shared control. Chevron understands this terrain. It never left. It kept people on the ground. It produces about 200,000 barrels a day already. Others would need time to rebuild teams, to relearn geology, to trust the rules. And here is the deepest constraint. Oil rewards patience. But politics demands speed. Capital flows only when futures feel stable. And stability is the one thing Venezuela has not yet earned. That tension leads directly to the next crisis. Because time is money. And Venezuela has neither to spare. The second shock is quieter and more dangerous. It arrives when the numbers are added up. Every barrel Venezuela produces needs inputs. Imported equipment, imported diluents, foreign expertise. Revenue comes in, but cash leaks out just as fast. Even at 1 million barrels a day, exports are not 1 million. People live here. They consume energy too. Net exports shrink. At current prices, the country might see under $15 billion a year. Gross, not free cash, not a windfall. Add another 500,000 barrels in exports. You gain under 10 billion more before costs. This is the moment expectations collapse. Oil helps, but it does not heal everything. And then the debt enters the room, 100 billion owed to bondholders, roughly 170 billion in external debt, an economy worth far less. Every future dollar has a claimant. Every recovery feeds yesterday's obligations. This is how oil booms quietly turn into disappointments. Not through failure, but through arithmetic. To understand what this means for ordinary people, we have to leave balance sheets behind and look at daily life. This is where the numbers become personal. Because you don't live inside a balance sheet. You live inside prices, jobs, services, time. Even if oil production rises, the money does not rush to you. First, it pays for imports, equipment, diluents, maintenance. Then it pays the past, old debts, missed interest, legal judgments. What reaches the street is smaller, slower, thinner. That means expectations matter. If people believe oil will fix everything, disappointment follows. And disappointment breeds instability. You may hear billions mentioned on the news, but hospitals still wait. Wages still lag. Infrastructure still ages. This is the cruel paradox of oil recoveries. They look powerful from afar, but they feel weak up close. If you are watching Venezuela and hoping for instant relief, pausa. Real recovery is quiet, incremental, often invisible at first. If this analysis helps you see past headlines and into real lives, share it, because understanding systems is the first step to changing them. To see how this story extends beyond Venezuela, we need to zoom out. Venezuela's oil story does not stop at its borders. It never did. Heavy crude moves through global systems, refineries, shipping routes, geopolitics. The United States feels this first. Its Gulf Coast refineries were built for this oil. Heavy, sour, difficult. For years, those refineries adapted. They turned to Mexico, to other heavy grades at higher cost. Venezuelan oil returning helps, but it does not transform markets. Not at these volumes. Globally, the balance of power barely shifts. The Gulf states still dominate spare capacity. They produce cheaper, faster, with fewer political risks. Venezuela my rival, Canada or Iraq over time, but not Saudi Arabia, not Russia. What changes is leverage. Sanctions weaken, alliances recalibrate, energy diplomacy adjusts quietly. Oil here is not a weapon. It is a bargaining chip, and like all bargaining chips, its value depends on trust. Contracts honored, rules kept, politics restrained. That is why the future does not hinge on barrels alone. It hinges on credibility, and credibility takes time to build, which brings us to the only question that matters now. What happens next? The future splits into three paths, not slogans, scenarios. The first is cautious recovery, sanctions ease, joint ventures expand, production climbs slowly toward 2 million barrels a day. Debt is restructured at a deep discount. Pain remains, but stability grows. This is the best case, not because it is exciting, but because it is realistic. The second path is partial revival. Oil rise, but politics intrudes, deals stall. Investors hesitate. Production improves, but not enough. Debt absorbs the gains. Living standards rise briefly, then plateau. This is the most likely outcome. Progress without transformation. The third path is relapse. Political conflict returns. Contracts are questioned. Capital freezes. Oil declines again. Debt tightens. Hope evaporates. Here is the lesson beneath all three. Oil is not destiny. Institutions are. Resources amplify systems. They do not replace them. Venezuela's future will not be decided by geology. It will be decided by trust, by patience, by restraint. And that brings us to the final insight, the one most people miss. Venezuela's story is not about oil. It never was. Oil is just the mirror. It reflects what a country has built or failed to build. When institutions are weak, oil magnifies weakness. When trust is absent, oil rewards no one quickly. When time horizons are short, oil punishes impatience. This is the mistake outsiders keep making. They see reserves. They imagine rescue. They forget the system. Venezuela is not sitting on a gusher. It is sitting on an aging machine, one that needs care, money, and above all, credibility. Oil can help stabilize the future, but it cannot erase the past, and it cannot outrun debt, decay, or distrust. If there is a lesson here, it is this. Real power is not control over resources. It is the ability to sustain systems over time. If you want to keep understanding how economics, politics, and power really work, beyond headlines and promises, follow this series. Share it with someone who still believes oil is an instant cure. Because the next story will ask a bigger question. What happens when the world learns this lesson too late?